hello, good morning, good afternoon, depending on where you are. Hey, Mike, so good to see you here. All right, good. Excellent. Love seeing all of you guys here. Um, I'm just catching up to the text chat. All right, cool, awesome. Thanks for joining us, you guys. Bill and I are here hanging out in Phoenix, Arizona, and it's in the 90s here and beautiful, and I'm never going back home to Seattle. Because it's exactly the Phoenix Project 2, Brett says. So we are just teaching our 2-day workshop, and we have a chance to join you with the class here. So we're in front of the class, and we're going to go through a couple things with the market. So thank you again for joining us here with our Phoenix group. We've got, just to begin, as a reminder, neither Bill nor I are registered broker-dealers. It means that neither of us will give you trading advice or recommendations, and you do know that trading has risks, so make sure that you are paper trading and practicing this before you're ever moving into a real money trade, of course. And neither of us have trading restrictions. Okay. A symphony with Bill beside me. Yes, something like that, Tom. All right, so why don't we do this? I'm going to bring e-signal in here, and let me show you some of the neat things we've got going on. One of the things I wanted to start with, to me, is always the starting point is the S&P 500. So if everybody can hear me, I think, okay. All right, so yeah, I just want to make sure the sound's coming through okay. Thank you. I think we're good. But with if we start with the S&P 500, this gives us kind of our frame of reference for what's happening in the market. So what you see now is a side-by-side window with a 5-minute chart on the left with the white background. This is our 5-minute of the S&P, and on the right-hand side, of course, we've got a daily chart of the S&P. So when you look at this and you look at the markets here, how are we looking? You guys notice we've been up several days in a row, right? And obviously, we've got geopolitical events going on, and then our domestic events and news on companies and stocks and all sorts of things. Dean is bringing up could look a little bit toppy. So with all of the worldwide events, what's happening in Belgium, which is awful, so on and so forth, all of this stuff gets incorporated into the charts and the patterns. So when you look at a chart, as you guys probably well know, I think it's really critical because this shows us how investors are feeling right now about the markets. Are they putting money into the markets or are they pulling money out? When you look at the S&P on the daily chart, this has been up for about 4 days, basically 4 days in a row, and today's our first little bit of a pullback. What's happened, and one of the things that I think you'll see over time, is that stocks have a tendency, whether trending stocks and the index, to push up, make some new highs, and then it will retrace, and then it's going to push up again and make some higher highs. We tend to see those patterns time and time and time again. What is happening right now on the S&P is it's overextended. It's moved up away from that 10 moving average, and when you look at how far away it is from the 10, you just eyeball it, but it's further away from the 10 than we've seen it in a while. That tends to give us the look that things are getting overextended. The other thing, too, and I love this, Jordan brought this up, smaller candle bodies after a rising 3 pattern. So you may see the rising 3. My lines don't stay on here for long when the markets are open, but here's a big rising 3 candle pattern. This is where you have a bullish breakout candle, and then the market's consolidated and formed a couple of dojis for 2 days, and then we have another breakout candle. So you have this completed continuation pattern, which tells us the markets are more likely to continue moving higher. So we got that, and then we had 3 further upward moving days right here, but each day the candle bodies got smaller and smaller and smaller. And today, candle bodies so far are so small that there's hardly a body. It's actually just doji so far today. These are all things that often happen before things come down and retrace in price. What tends to go on is as the sellers come in, people, markets at new highs, people may get nervous about the markets and they may start selling. Well, as people sell, obviously the price of the stocks come down. As the price of the stocks come down, then the price becomes more attractive to the bulls out there. And so that pullback in the markets and in stocks tends to attract another round of buyers. So where we're at right now, it's feeling a little toppy when you look at the charts. And so in a lot of ways, this is an area to keep an eye on things and look for stocks to retrace, because a lot of them will likely start pulling back here, and also dig in and find some of those stocks that have already retraced. By the way, here's a good example of that. Let me show you something. Some of you were in class with me last week, and we looked at Alibaba. It was back here. Let's see here, I love this playback function on these signals. So I'll just jump to this candle. It was right here. Okay, so can everybody see this on the daily chart? What I'm focusing on right here is the chart with the yellow background. This is our daily chart of Alibaba. Well, Alibaba had been moving in an uptrending pattern, and you see what's going on here. The stock was making higher highs, and it would pull back and make a higher low. And hang on a second. I got somebody saying you've got a black screen. Can everybody? Okay, thank you, Bill. Yeah, because I can see it here, and we've got multiple computers logged in showing that, so we'll help you in a second. All right, cool. So what we've got here, thanks guys, it looks like it's good mixed everywhere. So what we had on Alibaba is, at this point, the stock had already started making some higher highs, and then it would pull back and make a higher low. And so, we've got two people with black screens. Okay. So what happens when you have this pullback, as I mentioned before, the stock coming down in price, it tends to attract more buyers, right? And that's what it is. If anybody likes this stock, well, Alibaba a couple of days ago was 74 bucks. Now this day it's 72.23. So anybody who likes it is going to look at this as a value, and they tend to move in. So that causes this bounce, or this, basically attracting the buyers. As they put money in, you're going to see a bounce. And here on this day, when this candle bounced off of that 10 exponential moving average, and especially when it became bullish engulfing, meaning it moved above yesterday's candle body, right here where my mouse is, that tends to be a really solid bullish entry. And so you could use that as a signal that this stock is more likely to continue this uptrend. You could buy stock, or as I like to do, you could go in and look at buying call options, which is just, it gives you a little more leverage there. So it gives you a place to jump in and move into a bullish position right there on that bounce off the 10 moving average. Now, I'll walk forward here and just go, basically, I'll just go current here, walk forward candle by candle, and you can see what this stock has done since that bounce off of that 10 exponential moving average. And the thing is, this is not just something that I'm showing you after the fact. Literally, this day on March 15th, we had this in one of our online classes as a bullish entry target. All the stock had to do was trade above that candle body, that bearish retracement candle body, and I had a line drawn right on my charts that day in our online class, giving us a really solid bullish entry. By the way, this was last Tuesday night in our trader stock class. So we looked at this and had a target entry set up at 72.68 because of the fact that BABA had just retraced to the moving average. So now take that, and how do you use that? Well, you look at things like the S&P, where the S&P may be a little bit overextended right now. They've moved further away from the moving average, and so that means probably a lot of stocks that have moved up to these higher levels, but there are going to be some that are retracing, and maybe even over the next couple of days, they'll start pulling back. So what you want to do is you want to look for those patterns, somewhat like what I showed you in BABA, to give us some of those really nice bullish entries. By the way, anybody trade the spiders? I think we've probably got quite a few that look at them now and then. You guys, it's a neat, little tool to trade. Obviously, it's based on the S&P 500, but you can trade the spiders just like you would any stock. And so that's something to keep in mind. And I'd love you guys to do a little bit of a paper trade and practice this. If the S&P retraces back down closer to that 10 exponential moving average, and if we start to see that buying pressure, this can give us a really great bullish entry. So that's just a pattern I wanted to show you because this is something to start looking for over the next couple of days. There is, and this, I'll say this also works in the opposite level here, where we had a bullish bounce on Alibaba. Have you guys been watching Chipotle? This is a stock that it's been kind of interesting here to trade. It's been obviously really news driven. I'm going to take off this 200 simple moving average for a minute. There we go. So obviously with the E. coli, this has been news driven for quite a while. But what happened on Chipotle was the other day they announced earnings. So this was their earnings reaction day. As you'll notice, this stock gapped down. You can see it right here. They opened at $480, and the previous day they closed just around 503. So it was quite a significant gap down. Now, there were some post-earnings day trades on that stock that day, and it was all on the bullish side of things because the stock, after gapping down, as you can see, had a really strong day, and it retraced and completely filled the gap. Traded all the way up to this area of resistance with those moving averages. Now, just like I showed you Alibaba that retraced down to the moving average, all it had to do was bounce up off of that average to give us a bullish entry. You're going to see the same thing, but the opposite in stocks that are a little more bearish. And this is one. Even though they rallied all day, they could not close above those moving averages. So now you have those averages in that area that's holding more as a resistance, which then, if you're aware of that, that can enable you to move in and buy a put option right here on the next day if the stock moves lower. And we started out that day with a gap down, triggering a bearish entry. So moving averages will help you, I think, in both bullish and bearish stocks. And we had a nice 2-day downswing there on a just a nice little bearish trade on Chipotle. And this is thousands of dollars if you're trading options. Stock opened around 493, traded down to 456, and then we started to get our first retracement yesterday, and it will follow through today. And what you'll notice, what happened earlier this morning, we had a Bollinger Band pinch. So now if you look at the 5-minute chart, we had a Bollinger Band pinch right here, and when Alibaba broke out above that upper band, this is a place that can trigger a bullish entry. And we've had this bullish upswing is a nice little move from around 462.50, and it's traded up. See where it's slowed down? This is called the Bollinger Band top. It's starting to show some weakness right here on a Bollinger Band top price graph pattern, which is showing weakness. What I think is really important is that if you look at the daily chart, notice where that occurred. Really close to the high price from Friday. So where we hit that high, basically what what Chipotle has done today is they've traded up, nice bullish momentum push for sure, but they couldn't break out above Friday's high. So far, this is more of a bearish looking daily chart because it couldn't break above the high. This might actually be a developing, what do you think? Falling 3, exactly. So the candle patterns is, if today's candle body stays inside of Friday's bearish candle body, this is more of a signal that the stock may be pushing lower here, if not this afternoon, maybe over the next day or two. Now, what I'm looking at, when you look at Chipotle right now, this has moved into another Bollinger Band pinch. So we had one this morning, and now those bands are pinching together again, showing us that we have low volatility right now. Things are consolidating. Trading on this stock will come this afternoon if we get a strong breakout of that Bollinger Band pinch. That's one of the signals that we may get. So you may want to watch for that to occur this afternoon. Let's see. Yeah, sure. Yeah, Brett's asking MACD. I've never had MACD on the intraday chart. I always use it on the daily. Yeah, I don't use it on the intraday. And I don't know. I use MACD on the daily chart. I like it. I think there's a place for it. It shows divergence. My issue with MACD, though, is that it can show divergence, and it could take, on a daily chart, it could take weeks or months for that divergence to ever play out. And so it kind of does the same thing on an intraday as well, but it can take, maybe half hour or so. It could be hours, actually, before the divergence plays out. So it's a useful indicator to give you a heads up. I don't think it's the best timing indicator. I think we get better signals just from the candles. Yeah, okay, so what Britt's saying here in class is that he'll use it to help confirm something like you see a Bollinger Band top, they'll add the MACD with it. If you see MACD divergence and a Bollinger Band top, you're finding stronger signals there. And that's fine, you could do that. I look at the fact that the stock right here, it can't touch the upper band, and then you get that idea of kind of a bearish engulfing. That's often strong enough, I think, especially when it's combined with resistance at the high from Friday. So it's not that it doesn't work. I just find it wasn't telling me anything different than what I was seeing without it. So I'm trying to be more simplistic and try not, unless I'm seeing some real critical signals there, I don't want to use an indicator, because if we get too many, then we just get paralysis of analysis, right? Let me catch up here. Do I use, yeah, Mike, yeah, and that's another thing you can add to that is Keltner's on the 5-minute chart, which I love. Let me catch up here to the questions. Hey, PC, how are you? Yeah, let me check that out on the, my momentum today scan. Let me check that out, and you can always give tech support a call, because there might be something tweaked there. Oh yeah, Greg's bringing up Bill's entry on puts. Maybe I should let Bill talk about that.
Tell him I'm sitting right here.
He's right here. Great. I won't say anything bad. Are you talking about the one today or the one last week? Because today? Okay, because we had an awesome entry last week on Amazon, and it really, and this, I know you guys have heard this, but okay, I'm going to tell you again. You're going to hear it again. We had, so last week in Traders Talk Tuesday night, I had a whole big long discussion about why Amazon was more bearish than the S&P, and you needed to be aware of that, and that was going to fit into your trading plan. And here, and this, so this is Amazon on the daily chart. I know it seems it's random, but they don't see the lag. Okay, can you guys hear me? My audio cut out just for a second there. Thank you. The guys here in class can hear me just fine. It's so helpful. All right, so let's see if anybody could let me know if the sound is coming through. You got it? Okay, cool. So what I just started talking about was Amazon. So last Tuesday, I showed Amazon in my Traders Talk that night, and we had this big, long discussion about how it was more bearish than the S&P. The S&P was pushing up. Amazon it wasn't overly bearish. I mean, you look at this. This isn't a stock that's tanking by any means, but it was not as strong as the S&P, and that's very important to recognize, because it means either if the S&P remains strong enough, the S&P may pull Amazon up out of that sideways area to trigger a bullish entry, or if it can't, then it can provide some really great bearish entry opportunities. And what happened the very next day was Amazon tanked. And so Bill jumped in on the second 5-minute candle that day in the lab with you guys, and live did a paper trade with puts on Amazon, and this ended up, we did 2 different trades that day. And each trade, 20 contracts, ended up netting about 12, what did we say, 22? Oh, yes, call it about 20 grand each trade. 2 different trades, 20 contracts of put options in and out, made about 20 grand. The next trade later on, same thing, another 20 grand on 20 option contracts, put options, that was it. So pretty strong momentum trade, and we had another breakdown the very next day. So all of this is happening when the S&P is in the uptrend. So why on earth would you even have been thinking about buying puts on Amazon? It's because of the technical gap down that we had on Wednesday, and it's because it was weaker than the S&P. So if something's going to go down, you want to buy puts on the stocks that are the weakest out there because they're going to drop the furthest. So it's a really great trade. So we have that. And then Greg's asking what I think about Bill's entry for puts on Amazon when it was near the end of the fifth 5-minute candle. 1, 2, 3, 4, 5. I don't know. Honestly, I didn't see it. Okay, here we go. I'll let Bill chat about that. But for the way that I trade in the morning, when something gaps down, again, whatever, it doesn't even matter. It could gap. It doesn't have to gap. But when you have a breakout of the first 5-minute candle, that's the trading that I like to do. So that would be a bullish entry over here to catch that part of the upswing. And so that's the piece, just the trading on that second 5-minute candle. That I like to teach. I'll let Bill talk about the rest of that because I'm not quite sure. I wasn't watching that trade. One thing I will tell you right here with Amazon, it's moving into a Bollinger Band pinch. And a Bollinger Band pinch is the sign that things are slowing down, a low volatility. So if we see things picking up and we get a breakout of this low volatility, that stuff is tradable. All right, so with that, thank you for giving me a little bit of your time, guys. I'm going to pass this over to Bill and let him maybe show you the Amazon trade and a couple other things going on here. All right, here you go. Thanks, guys.
All right, guys, so welcome into our Phoenix event. We got a whole bunch of people here in Phoenix. Great weather, great group of people, and, well, it's great weather outside. The weather inside here might be just a little chilly. You could hang meat in this room, so we're trying to get that taken care of. I'm looking out, and everybody wearing jackets look like they're bundled up, and I didn't even know people in Phoenix owned jackets, so now I know. So we want to thank you guys for coming in here, spend a little bit of time with us. A little bit unusual that we're doing a live event on a Monday, Tuesday, where Markay and I are co-teaching the event. Having a great time here in Phoenix, great group of people, a lot of people coming out to check this out. You should be here. Don't miss the next one. That being said, we also have our Unplugged event, and we wanted to spend some time with you guys talking about some of the really cool stuff that's going on in the markets. Obviously, we had some trades that went on this morning and some stuff that we want to look at as well, some things that we did in the morning lab. Just as a real quick example, guys, the calendar spread strategies that we've been doing, there's some candidates that are starting to show us some really good moves. And don't look at the chart, nothing to see here. Okay, I'll show that one to you in a minute. Y'all missed it, didn't you? You weren't paying attention. Let me talk about Boeing here real quick. Boeing put together a really nice move. We are up on 40 contracts on this position. The paper trade, again, understand everything's a paper trade that we do in here. But every single day I've been waiting to sell call options on this, and every single day I get turned away. I keep going to the market, and I'm like, hey, look, I bought some call options, and they expire in September, and I'd like to sell some call options. And I look at the chart, and I'm like, the thing just keeps going and going and going. It's like the Energizer Bunny won't pull back. We finally saw some resistance up around the 200 moving average today. We were able to sell some call options in a calendar spread. So for those of you that are new in here, think of it this way. All we did was buy a long-dated call option, an option that expired in months, back here on this candlestick right here. We said it's a breakout. Let's go in. Let's buy some call options. Well, let me just ask you guys here in Phoenix, can you make money on a stock that goes up if you own a call option? Yeah. So the plan here is to make money as this stock goes higher, and it's been trending higher. But the thing is, we don't make that money until we do what with those options? You sell them. You don't make money till you sell, which is going to be great if the stock trends for the next 6 months and we get to sell it for a big chunk of money. But in the meantime, there are bills to pay, so we've got to do things like make some money, cash flow. So what we did is this morning we went in on the small body candlestick below the 200 moving average. We sold the 137 call option in our paper trading account, which is up here above the 200 moving average. So does it look, at least right now, like that 200 moving average may act as an area of resistance for this stock? By selling that 137 call option, we brought in, and guys correct me here in Phoenix if I'm off on this, but I believe it was like 36 cents, was it not? 36 cents on 40 contracts is what we brought in. That's not a terrible little chunk of cash coming in. Oh, by the way, remember this is a weekly option, so this is cash that's coming in for this week. So really kind of a cool setup there for those of you that are in the Boeing paper trade. That's how we're managing it right now. We got in, sold some call options, and did it today. Finally had our first opportunity. Home Depot, another one, and another calendar cash flow trade. We had a really cool signal yesterday. In fact, right here in Phoenix, showed the folks in Phoenix here. And yesterday's very sharp candlestick, after being up for 1, 2, 3, 4, 5, and then a small body candlestick. We know that stocks tend to move from what Markay teaches us for 3 to 5 days. We saw the small body candlestick, started to get ourselves ready. When the stock started going down yesterday, we sold a call option, brought in 32 cents on that call option. So again, both of these are new calendar spread strategy candidates that we've been in now for a week or two, finally giving us opportunities to sell some premium, bring that money into the account. And on Home Depot, I mean, we've got some fairly sizable positions in there. Home Depot retraced today to the 5-moving average, started breaking down, and then rallied above it, which means that we've got to be a little bit careful with the option that we sold because we don't want that to go in the money. But let me ask you this, even if it goes in the money and I have to buy it back at a small loss, am I going to be crying in my Cheerios that a stock I bought a call option on is going up? No, that's why we bought the call option. That's what we want to see in there. This is stuff that I cover, guys, in the calendar cash flow DVD set, which, in fact, I was just texting while Markay was talking to our Chief Operations Officer, confirming that we have received the DVDs and the materials for them, the video, and that we're now cutting the DVDs as we speak. For those of you that know where I'm going with this, today's your last day to get the pre-release pricing on the calendar cash flow DVD set. After today, the pricing, best price you're going to get on it is $12.95, and that's at a live event. Right now, if you pull the trigger today, it's $9.95. Okay, so you're getting a significant savings there on that. And a lot of you know that I was actually making outbound calls last week, reached out, talked to a bunch of people, and gave you guys a great deal on Markay's new DVD set, which is now out. It's in full production. Some of you guys have received it. Phenomenal stuff on there. Make sure you guys get that taken care of as well. Let's see. Really don't know the answer to the question. On Amazon. Okay, so Jim's saying on Amazon and the confluence of the averages. So let's go ahead and let's talk about Amazon there. I want to make sure that I pointed out the calendar cash flows trades right now. Gina says, where did you get in on Boeing? And then she says, aloha. Gina, are you in Hawaii? Seriously?
She lives in Hawaii.
So it must be like, what, 2 in the morning there, right? Because it's still morning here. It's freaking me out. I'm like, I want lunch, and I keep looking at my watch. I'm like, you can't eat lunch at 8. Just not going to work. So let's 6:30, she says. All right, well, how's that? I mean, there's somebody 6:30 in the morning she's getting up to go to the free class. I love that. Wanted to reach out there and show you. So on Boeing, where did we get in on Boeing? Our entry on Boeing, guys, was this second candlestick above the 50 moving average, right? So we broke out above the 50 moving average. We had been in a trend at this point. You could see where Boeing was putting in higher lows and actually aggressively higher lows and nice higher highs. When we broke out above the 50 moving average, bullish engulfing candlestick, had everything that we needed to go ahead and pull the trigger, and the stock on that breakout of the 50 moving average has moved very nicely since then. We've been waiting for a chance to sell some calls. Would you guys like to see one that, and then Jim, I'll get to the Amazon trade here real quick. You guys want to see one that I was scanning through and looking for some stuff this morning, and a candidate that popped up for a potential future calendar spread trade? Would you guys like to see it? This would be a trending, okay, so like 3 of you. So I'll show the 3 of you later on out there in the hallway, and the rest of you guys. I mean, guys, this is powerful stuff. Teresa says, yeah, I'd love to see it. Jose, so folks get it. Check this out. Let me just start by asking the question. Is this stock trending, yes or yes? Right? I mean, we've got a gorgeous bullish trend on this stock. And what did it do today? Pulled right back to the 5 moving average and then rallied off of that and is starting to bounce and go higher. To me, this looks like a place where we could consider an entry into this. And guys, this is ticker symbol WHR. Anybody know what that is? Good. I'm glad you guys know. I didn't know. I was just like, I like the chart on this one. I'm going to pick this one. Okay. Whirlpool. So Whirlpool, nice bullish trend, starting to break out. Obviously, we've got to go through and we've got to do some analysis of the option chain. And that's something that we will do, in depth. And those of you who have my DVD set know the 3-step process that we go through. We start out a year out horizon to look for the implied volatility, make sure the options are not overpriced. Then we come into the 6-month period of time. We look for the right option and then compare that to the front week and make sure that there's a 10% premium available for the at-the-money option. So we'll go through that process. Obviously, we're going to look at this one in the lab for those of you that are in there as well. We've got some new students that are joining us in here, and I mean, when I say new students, they're folks who have never been to a BetterTrades event. They're coming in and checking out Unplugged from a relationship that we have with eSignal, so they're getting an opportunity to come in and see what it is that we do. And a lot of what I'm getting from the folks who are coming over from eSignal is that they are essentially equity traders. They don't do a lot of option trading. In fact, I was talking to somebody here in Phoenix. It was you, right? That you do a lot of equity trading. You haven't done any option trading yet. And so I'm going to encourage you as well. If you're a little bit more maybe advanced as an equity trader, but you have not done or are not familiar with options, I do a class every other Monday at 7 p.m. I want to write it down. Monday at 7 p.m. I do a class called Options 101. It is designed to introduce the equity trader to the exciting world of options trading and show you how to use the leverage of options as well as using options as security and insurance on some of your equity positions. So you guys feel free to come out and join us for that. It's going to be an awesome opportunity to learn a little bit about that. Markay says, how do you find these stocks before they move so far? So the example I will give is Boeing, right? Because Whirlpool has made a move. I mean, it's killing me on this one because I had kind of been watching this one back over here, and I was like, oh, I'm going to watch and see what it does at the 200-day moving average. And then some stuff came up, and I got busy, and time passed, and then I came back, and I think I looked at the chart right here, and I was, let's just say I was a little upset because I wanted to catch it right when it broke out above the 200 moving average, and the stock moved $11 past, and I was like, well, crap. I mean, has anybody ever missed one? One or two, right? Anybody know somebody who's missed one? Let me ask it that way. Okay? If you know somebody that's missed one, let me ask it a different way. How many of you are in Whirlpool right now in the stock or an option trade? No? Well, y'all missed one. All right, so there you go. Missed it. I was like, man, how in the world? Here's what I'm going to tell you, Shaka. Even if you miss it, there are other opportunities. Just because you missed the first run does not mean that you missed the trade. Does that make sense? So the momentum in this stock is bullish. We want to look for a bullish trade, and so we want to find that. I'm going to reveal something here to you, those of you who are here in class, those of you in Phoenix, and Shaki who asked the question, and it's this. A lot of my candidates that I find before they make a big move, I find in Markay's Trader Talk. Now, that's an improvement because I used to find those candidates after they made the big move in Markay's Trader Talk, right? She would be in there talking about a stock, and I'm like, man, I should have got into that. And the next week I'd be like, man, I really should have got into it. And after a month, I'd finally get into it. Anybody ever do that? You're like the guy who makes it go the other direction. So the key is to get in before it breaks out, before it makes its move. And that's exactly what we're doing on, for example, stocks like Boeing. We caught a nice move on it. So what I'm going to tell you is get involved. Get into these classes. See the stuff that we're talking about. Here's one right here. It's Whirlpool of all things, and it's starting to make a nice move. Okay, so we'll be watching this one. We'll be looking for some stuff there. Teresa says, We looked at Starbucks before. Yep, exactly. Greg says, are you concerned about horizontal resistance? Oh my gosh, what a great opportunity for me to tell you what Markay would tell you. Let's first start with this, Greg. Is Whirlpool in a trend? Yeah, okay. Is there potential horizontal resistance up here somewhere? I mean, I don't know where it is. I used to be really good at drawing these lines, and then after a while I was like, you know, even when I draw the line, it seems like I draw it wrong. Anybody know what I'm talking about? Okay, so I quit drawing lines. I don't know, is that what we're looking at, or are we looking at this one, or look, I can draw them all over the freaking place here. How about that? Look, I got resistance everywhere, don't I? Right? And so my point is this: can I go in here and create every reason in the world not to trade and say there's resistance, there's resistance? Yes, I can, but right now, just looking at this chart, look at the parabolic nature of this trend. This is crazy bullish right here. Well, that being the case, of the two, which is more powerful, the trend or horizontal resistance? The trend is always more powerful. Could I be wrong and end up getting stopped out? Absolutely. I've seen me do it before, which is why I trade with a stop. I don't care. If I get stopped out, that's part of the trading plan. But I'll tell you what, if I can catch Whirlpool on a nice retracement here, like what we had back over here below the 200 moving average, that stock has moved $17 from that point. I'd be all right if it just moves another 17. That'd be okay, right? So am I worried about horizontal resistance? Here's what I'm going to tell you. When a stock is in a wicked trend like this, I not only am not worried about it, I don't look at it, I don't care. I'm going to focus on what is truly important, and that in this case is the trend. Okay, so Greg, I'm not really worried about it. Trend trumps resistance. I like that. It's timing. We'll just put it that way. All right. Real quick here, I want to go through and just look at the Amazon trade. Guys, I know some of you have signed up for the new Success Symposium that we're doing in Orlando. Some of you guys saw the banner where we put the canceled over Trader Super Summit, and it was great. Some of the calls and emails that I was getting from people who were like, you can't cancel Trader Super. Well, we canceled it because people were saying, well, I'm not going to go. It's the same old stuff that I didn't learn the first time. They didn't say that I didn't learn. I added that part. But they said it's the same old stuff, and I don't want to go back and have the same old stuff. So we restructured it. We rebuilt it. We put a bunch of really cool stuff together. And, guys, we are coming up on an important deadline for you guys to get involved with what is now going to be the Success Symposium. We're going to take it. We're going to talk about trading, obviously teach it, but we're going to take it beyond just the trading. We're going to talk about success. We're going to talk about different ways of attaining it in the market, and we're going to do that in Orlando. That's coming up. In a few days here, you're not going to, well, here's what I'm going to tell you. In a few days, the price goes up. Take advantage of it. Give us a call. Do it now while you can. The Amazon setup here, and what DC Jim was asking about, what Greg was asking about, he said, I thought you were supposed to wait for 2 5-minute candles to form after crossing the moving average for confirmation. You can, absolutely. Now, what I did this morning was I got in a trade, and I actually got stopped out of the trade, and what I was doing was fading the activity on Amazon. Amazon had traded up sharply this morning after gapping down and encountered what was potential resistance on the daily chart. So if we take a look at the daily chart, that area was right in here. Well, what is right in here? The 200 moving average. So the idea behind the trade was simply to go in and buy put options at an area where the stock may break down and trade lower. It didn't. It rallied higher. Oh, man, Bill, you were wrong. You suck at this. Well, actually, I was not wrong. I was right because I traded with a stop. I had a very defined area where I was going to exit the trade. And ladies and gentlemen, whether you get stopped out of a trade or not doesn't matter. What matters is execution. right? It's not how much you make or lose, it's how well you execute the trade, the profit will come. And so the execution was there. Now, take a look at what Amazon's doing right now. Amazon is potentially breaking out of a Bollinger Band squeeze play. And if only I had more time to spend with you, we might be able to talk about that and show you how to actually trade that. Now, if you were in Phoenix, you would have that time. So, guys, seriously, we are running low on time here. Take a look at, I like that. Mike says, Star Trek, Next Generation, Resistance is Futile. I like that. That might be a good name for a class about trending stocks. Nice breakout here on Amazon. Just to give you guys a quick little look at what's going on here. The stock's breaking out. Volume is picking up. Options are reasonably priced, and typically this time of day they really are. One strike out of the money, essentially the at-the-money 560s are going for $5 by 510. I'm going to pick up that position here in Phoenix, and it is a paper trade. We're going to talk about how you manage it, how you put your stops, how you work that. But for those of you here in Phoenix, again, it's going to be the 560 call option that we're buying on Amazon, and it's based off of this breakout. And Greg, exactly what you talked about before, we've now had multiple candlesticks above that 200 moving average, so time to take a look at a bullish trade on that. All right, ladies and gentlemen, that's what I've got for you. For those of you that are new in here, make sure that you get into the Options 101 class. For those of you that are not new in here, make sure that you get to the Success Symposium coming up in Orlando, and make sure that you're going out to our live events. If you guys are interested in Markay's new DVD set, those of you that are in this class because you're in this event, I am going to declare, because I'm the CEO and I can do that kind of stuff, declare this as a live event. If you want to get live event pricing on Markay's DVD, her brand new DVD, you need to call in the next 30 minutes. And if you don't, well, then it's going to go back to its regular pricing unless you're in Phoenix. Y'all should have come to Phoenix. I'm telling you, there's all kinds of good stuff going on here. Ladies and gentlemen, that is all the time we've got for you. We appreciate you guys. I appreciate spending some time with you guys, and I want to extend my gratitude to each and every one of you. Wish you guys all the success in the world. Godspeed, God bless, and we'll talk to you guys at the next live event.